Hello, good morning, everyone. The market so far is looking bearish, but we are looking here at this moving average to see how it closes in 30 seconds. How this candle closes here. Welcome back to Bullion Bullz Trading. Today we are trading strictly based on my proprietary structure model. We're not going to be guessing, no emotional entries, only confirmed alignment. Let's wait and watch and see how the market performs. Remember, we are looking at three different things. We're going to be looking at our bias here, which is pointing towards being bearish. We need that to align with, the market structure, creating lower highs and lower lows. And we need our volume to align with our direction. If we have these three things together, we can go ahead and take the trade. Right now, we have our bias, but this rejection here is telling me that we're still bullish. A close below these two moving averages is going to help us assess whether we will remain bullish or we will flip to bearish. So we just got to wait today to see if we can get better entry. Let's look at Forex Factory. So this is something I want you guys to look at every single day before you start trading, because as a trader, we want to know, how good volatility is in the market. The higher the volatility, the easier it is for us to trade. So if we look at today, it's 24th, and we see we have one orange news here, another orange news right here, and then another orange news right here. When there are orange newses, we like to trade 30 minutes after the news. Like personally, what I do is, like, I don't like to trade. Normally, you only wait for red news, but with gold these days, you gotta wait for your orange news as well. So I'm gonna wait another 30 minutes before we start, looking for our setup. Also, if you look at the volatility, if you look at the overall volatility, it's pretty high right now. Like our average true range for right now is 6.72. So remember, when this happens, you want to risk less in the market. The higher this number is, the less you risk in the market. The lower this number is, the more you risk, because you gotta risk more to make the same amount of profit. But here, if let's say if this number is high, then what you gotta do is you gotta risk less to make the same amount of profit you're making every single day. And you can look at through your position size calculators, and whatever way you guys use to figure out your position sizing. What we like to do is we like to trade in higher time frame bias, Right now, you can see the 30-minute chart is bearish, but we're rejecting this level. We're not going below this level. So we just gotta wait and see how this candle closes, because this could be an area where gold can just turn bullish from. So we just gotta wait. And this is why, we have a rule-based approach, because everything has to align. Our bias has to align with our structure, and our volatility timings have to align, which means your news, your events that might be coming up uh, in the direction of our trade to maximize our chances of becoming profitable on a particular trade. So our higher time frame structure is still bullish. It's still bullish, even though it has broken the band. It has gone below the band. We're still bullish, uh, unless it breaks below this level. Then we will start to flip bearish. But our bias for the day is gonna be bearish so far. Our bias for the day is bearish, um, and based on our structure, we're just looking for bearish trades for today. Let's see how the market did in the morning. So, okay. Yeah, so this was all range. It was range bound. Anyone who tried to trade here would have gotten stopped out, which tells us there was low volume in the market. Whenever you want to check if it's a good day to trade or not, you can always go on your daily time frame to see how big of a candle it created. So the candle is comparable. So it kind of took away all this move that it did yesterday. So it tells me, yeah, so this move was 235, 231 minus 20, and then this one was 248 minus 120. So yeah, it's comparable to yesterday's move. We're gonna wait and watch, how price respects and moves, and then how everything aligns. Because look at this. This structure is bearish. This structure is bearish. This structure is about to turn bearish. And our 30-minute is the only structure that is still bullish. And on this channel, we will always rely on our high time frame, because what happens is when you try to trade against the higher time frame, the trade might go like in your favor, but the pullbacks are going to be very, very aggressive, which is going to scare you, and you're going to, pretty much close your trade or hit your stop. So that's why it's just better to wait for an entry rather than, trying to find an entry. And that's why we've created this rule-based approach. So volume is coming in. You can see there. It's becoming extremely bullish. Structure is bullish, however, bias is bearish. We want everything to align before we take an entry. So we'll just wait. So anyone who's joining us right now, I'll go through the trade criterias that we use, the criterias we use to, essentially take our trades. Number one, we need to see our bias, which will come through our oscillator. If the oscillator is bullish, we are looking only for bullish trades. If the oscillator is bearish, we're only looking for bearish trades. Next, we will look for the price structure. If either it's bullish or either it's bearish. In this case, our bias is bearish, but our price structure is still bullish. And it's rejecting at a very, very strong level. Last but not the least, we need the structure to tie back into the volume. If all these three things match, we would enter our trade. So these are the three things we need to ensure, because these are number of buyers in the market, these are number of sellers. It's telling me the number of buyers are increasing, number of sellers are less than the number of buyers, and then that is then being translated into this matrix, and it's telling me that we just have to wait for now. So, and it's only because the volume is strong, but the structure does not align with the volume. Sorry, the bias does not align with the volume. So we just got to wait for now. Yeah, this moving average that you guys are seeing here, the blue one, it's the EMA 222. Anyone who is using EMA 200, it's still fine. I like to use EMA 222 for my own setups. Because it is, I've seen in the market that it is that last line of defense that if broken, you would know that the price has turned extremely bearish if the price is moving down, or turned extremely bullish if the price is moving aggressively to the upside. And again, also today we have news. You guys can see here all this orange news. We just got to make sure that we don't trade, we only trade 30 minutes after. And plus this if FOMC members are speaking, these days are mainly either very, very unpredictable or or less profitable for us. So we just gotta wait. We're just gonna wait for now. On this channel, you will learn things that other people will not teach you. That's my goal. And I have gained this knowledge through almost 5 years of trading now. And also another thing I would like to share is what was pivotal in this journey for me was when I realized what type of personality I have. When I learned about my personality, I knew that I'm an analytics person, and that's why I built a rule-based approach based on my own personality. Not everyone, discretionary trading will not work for everyone. So don't force yourself to learn someone else's way of trading. Rule-based traders are restricted traders, they are profitable traders, And plus you have a system that has been shown to be profitable. And that's why we'll be trading this system live in front of you guys every single day. And this has only come through fruition through, my team's hard work and our observation of the market. And 90% of in trading is actually waiting. You have to wait. You have to wait for your setup to form. You have to wait for the market to give you its hand. And once the market gives you its hand, you're ready to take the shot. And in markets, patience actually compounds your accounts. It's not, taking random trades that would compound your account. It's compound your account basically. It's just having patience, waiting for your trades. And that's what we are doing today. Welcome anyone new who's watching this channel. I was just letting everyone know, the different rules that we use to trade every single day. Will be live every single day during the New York session. And we will, try to be live during the Asian session whenever there is volatility during the Asian session, because I actually like to trade the Asian session as well. But these days it's just because because of so much of an uncertainty in the markets, in the environment overall, in the macro environment. Asian sessions are not that directional. Yeah, while we're waiting for a trade, I'll walk you guys through the different systems that you see here on your screen. So this is our oscillator, Bullion Bulls oscillator. Uh, this oscillator is our bias detector, our overall bias detector for the day. This is the direction we will take when we want to start trading for the day. Today, it's pointing towards being bearish, so we're only looking for sell trades as for now. Next, we're waiting for price structure. Either it makes a higher high and higher low, or it makes a lower high and lower lows. So right now, our price structure is still bullish on higher time frame. Last but not the least, we're looking for volume to tie into our higher time frame direction, which is we need to have more sellers than buyers. If that is the case, we will be looking for our setup to form. And once our setup forms, we will take our trade. So right now we're just waiting. This is just a dashboard. This is just a dashboard. It's telling us that yes, the overall market is bullish. It's taking into account, I think, the 4-hour chart. Yeah. If you look at the 4-hour chart, the 4-hour chart is still bullish. But what we do is when we are trading, our oscillator is actually taking into consideration the 30-minute chart. So this gives us more, short-term bias. And this one is a more of a longer term bias. Ideally, they both should align. But for the purpose of trading on this channel, we like to align our 4 time frames here: 30-minute, 15-minute, 5-minute, 1-minute for bias detection. And then we have our market structure and volume, number of buyers, number of sellers in the market. If everything aligns, we will look for our trade setup. Anyone new watching our channel, uh, you know, on this channel, you should like this. This channel has been created to show people the different types of tradings there are, right? Trading methodologies there are. Like right now, you see on YouTube, majority of the people, they like to trade a they have certain style of trading. And a lot of them pretty much use the same methodology, give or take. However, we here have developed our trading methodology based on our experience of 5 years of trading and taking elements of different trading styles and then combining them, because this is what will your journey entail. Your trading journey will include, eventually you taking things that you understand and giving them your own twist to then make your own trading style, which would then also become your own trading setup. So as of right now, we're still waiting, guys. Yeah, as of right now, we're still waiting. I think we need to refresh. Just gonna quickly. Yeah, I think I'll have to refresh this. Let me refresh it quickly. Yeah, yeah, that's better. That's better. Yeah. Yeah, so yeah, you guys have to, find your own style of trading. And as I mentioned yesterday in the live stream, this is it's a marathon. It's a marathon, not a sprint. So like this trading is not easy. Trading is not easy. And merely copying someone is not going to help you succeed in becoming a good trader. You need to learn through your own journey, because you'll become a lot more effective as a trader when you use elements from your own journey. Yeah, right now we're just waiting. We're just waiting. And you can see we did a right job there. We did not decide we decided to just sit outside or sit on the sidelines and wait for our trading setup to form. And it seems like uh, it's not just gold, I think. There's going to be other things as well. Here we are only trading gold, but I'm just going to be quickly going through to see if there are any markets that are moving. Not really. It's just very, very choppy. Yeah. We're just going to keep eye on gold. Here we are only trading gold on this channel. Let me know if you guys have any questions. Very happy to answer. Like these days on gold, there's just so much momentum that whenever that momentum shows up, I like to actually trade in the direction of that momentum. So I'm expecting a move at like 8 a.m. after the news. We might see some volatility coming back in. Like right now, it's pretty slow, and we're just waiting because none of our none of our indicators are pointing towards an alignment in the direction of our trade. So we just have to wait, and we're not seeing any of our trading setups form. No trading setups are being formed. Market is extremely uh, like there's so much indecision in the market right now, because I think the biggest move that happened in the morning. So right now we just have to wait for the volume to come back, and then we would be trading in our direction. We just have to wait for now. Okay, while we're waiting, I'll show you guys another thing in the market that I personally like to use, and it's something I've recently discovered, right? So you come to 12:30 candle, right? At 12:30 here, this is your 12:30 candle, 12:30 a.m. And what you do is you go to the anchored VWAP and you draw an anchor from this point. So you can see that this area, we were in range. It was range bound, right? Price stayed in your range pretty much. And this tells you that this is the range you want to trade for that day, basically, right? Now, 5:30 a.m., the gold opens, right? It opens. The gold auction starts at 5:30 a.m. Eastern. So 5:30 a.m. the gold auction starts, and then we have market open at 9:30. So these, like you can see, this this point here showed us that the price was about to get bearish. And the band turned from red to orange, telling us the price is extremely bearish. So today the move actually happened before us, like before we came to the market. So we're just gonna wait for now. Seems like we're about to get a move. Uh, this is telling us that the 30-minute closed below this like this large sell candle, and if this closes below, like the candle that's the 30-minute candle that's forming closes below this moving average here, we might start looking for a bearish entry. So it's 8 a.m., right? It's 8 a.m. and we see market starting to show us the bearish direction, and we have our news that came out at 8 a.m., right? So we just gotta wait. Like, such days will actually be annoying where you just have to sit on your hand and not trade. And I used to get frustrated when such days would show up, and these are mainly the days when people either get chopped out or they blow their accounts, because if you're not controlling yourself and if you're not controlling your urge to trade, you are going to lose your accounts. You're going to lose your cash account, you're going to lose your personal account, you're going to blow up your challenge accounts. So sometimes it's just better to wait, and that's what we're doing today. Yeah, I'll be back, guys.